to join us and take the discussion forward about crude oil, commodities, global cues, we have Peter McGuire, who is the CEO of XM Australia, joining us early in the morning from the studios. Morning, and thank you so much for taking all the time to speak to us.
Well, lovely to be here, Nickey.
All right, I'm going to start off by asking your assessment. There's a bit of drop coming in, a bit of volatility creeping in the crude oil markets. 2% drop after 6% sharp losses that we've seen. Clearly, the levels have been taken off.
Sure.
Your assessment, demand situation, and the levels that one could work with.
Well, I think over the last week has been electric. We've seen that big washout, about 12% down. So really, that took the market by surprise. The first part is I think it was exhausted to the upside. It was parabolic over the last 100 days of trading, and that really gets to a point that markets get ahead of themselves. And we've seen that pull back now to that $83, $84 level. There's probably a couple of more dollars there to wash out, and then I think it'll stabilise. So the markets are certainly dynamic and very volatile.
Sure, that's clearly the one thing that we've seen across, right, in terms of the higher interest rate also that we've been talking about. Enough and more has been spoken about it. What's the bearing essentially? How do you see US Federal Reserve kind of holding back on the interest rates higher for longer? What kind of bearing it will have on the markets? How are you looking at it in terms of commodities, in terms of crude oil, in terms of dollar? What's your perspective?
Well, I think first off, if we look at the US dollar index, it's now nearly at 106.50. It was at 107.30 over the last couple of days. This week has been very dynamic. I think that there's probably more upside for that US dollar index, maybe up to 108, 109, and then we'll revalue where we are. As far as interest rate policy from the Fed, they're all saying that probably November there could be another rate rise. So people are saying, this is where the analysts are talking, there's every opportunity there for the Fed to actually hit the go button. As far as pullbacks in 24, we've just got to see how the first quarter moves, if we're going to see any pullback from the Fed as far as reducing rates. So I think the next couple of months are going to be very dynamic, and those high energy prices are certainly a factor for consideration.
And within the commodity space, what do you like in terms of base metals, in terms of coal? What are you looking at? What's your top bet? Your assessment?
Well, over the last couple of months, it's certainly been crude oil. It's been one-way traffic. Base metals have been languishing, and they're back to that, if you're looking at copper, that 8,200 a metric tonne. So it's been very soft. If I look at the gold perspective, it's been incredible washout, and we've seen a very big correction to the downside along with silver. So I think its best days are ahead of it over the rest of this year. So more upside for gold, and just keep an eye very closely on the US dollar index and what's happening with earnings as far as US equities coming forward.
All right, let's also chat about the US 10-year Treasury yields right now, which are near around that 16-year high level. The real question that I really want to ask here is, how long can the rise, yields can rise further? And if so, at what point of time do you think higher yields will inflict some amount of serious damage on the economy?
Well, we've got to be conscious as far as where we are with equity markets. If you look at the NASDAQ, it's been incredible over the first 8 months, and we've seen a washout or a little bit of softening in September, and that's probably been followed through in October. The Dow's performed fairly. It wasn't a bad first 6 or 8 months, but it's given back all of those gains. So I think you've got to be very conscious as far as equities over the next couple of months, where if we see growth in what particular sectors. As far as interest rate policies of impacting that, high yields, as you mentioned with the 10-year, there's easy money to be earned by taking money out of the market and sitting on the sidelines earning interest. So this is where the risk perspective needs to be considered, and that's where traders have got their eye on what are the opportunities leading forward over the next couple of months.
All right, a very broad-based question there for you, perhaps in terms of the themes that you're looking at, be it in terms of commodities, be it in terms of dollar, be it in terms of perhaps commodity basket. Along with that, what you're really looking at, what seems to be more favourable at this given point of time?
Well, you can't take your eye off that US dollar index and high interest rates. So that seems to be a big attraction, and the energy stocks, because they've had such a big build over the last couple of months. So keep an eye on the US dollar, what's happening as far as against currencies, the euro, certainly the yen and the pound. They're being crushed at the moment, and there's every opportunity that I think further uptick for US dollar. So if that happens, what's going to happen as far as other currencies, and what impact is that going to have to, I think, the global interest rate perspective?
That's that in terms of what I had to ask in terms of the commodities, in terms of global cues. But since your final word coming in on the interest rate scenario, perhaps, how do you view that and the bearing that it will have for the global markets. How are you looking at the entire situation?
Well, I'm keeping a very close eye, like all traders are, where we are as far as Fed policy and other central banks moving. You guys have got an interest rate decision in the next hour, but I don't think you're going to see any movement. So, or the next, as far as India is concerned, the next part, of course, is what happens with policy going forward into 24. And if we are to see a further hike or more consideration as far as rate policy moving up, then that's really going to be a dampener, I think, for equities. So we've got to be very mindful of where interest rates and their impact as far as from an inflation standpoint, and where traders are looking for opportunity. And that's going to be the exciting point over the next 3 to 6 months.
All right, Peter, we're just going to leave it at that. And thank you for taking out the time and joining us in the studios this
morning.
morning.
Thank you, Nickey.